Hey kids, what's up? So normally in a down market, which is where we are basically since January of 2022, normally the wealthy will run to hedge funds to protect their money in the down market. Uh, but since 2020, there were a lot of hedge funds that decided to jump into the game and wanted to play along and make some money as the market took on its big rip through 2020 and 2021 coming into 2022, which who could blame them? Basically all of 2021 or most of 2020 and 2021, you could throw dog poop against the wall and it would double. So, you know, who wouldn't want to come into a market that was doing that? There was so much being pumped into it and so many buyers coming in. It just absolutely made it rip. Well, anyway, we hit 2022 and, the market started to cool off and do a little melting and has been ever since. And you're looking at some tech stocks that, down up to, 65%. But if you look across the board, you notice that the stock market's fallen. The crypto markets are absolutely just demolished right now. And metal, which is typically a hedge, a wealth preservation type thing, it's even kind of cooling off and falling. So you got everything falling at the same time. And what's going to happen here, or what you should kind of look at, is the fact that these hedge funds, as they were pouring all this money into the market, whether they were taking advantage of the advancing market or taking advantage of the stocks, companies, and cryptos or whatever they were looking at that were going down. They may have been shorting them on the way down. Anyway, a lot of the money that they were taking to do these deeds is leveraged, which means, say that you wanted to buy $1,000 of it, which they operate in millions, and up. But if you wanted 1,000 of it, you could operate on leverage or margin, and basically you put down $1,000, and a bank is going to put down, say, another 9,000. So on your $1,000, you've got a $10,000 deal in there. Well, the problem with that is you're going to pay interest on that borrowed money. And if all of a sudden it goes the wrong direction, you're losing a bunch of money and you're paying interest on that money that you're losing. So anyway, if you look back through 2021 mainly, into 2020 and into 2021 coming through, just look back through at hedge funds that are out of business, that went out of business. There's been several, quite a few actually. And it seems that there's going to be quite a few more that the same thing's going to happen. Now we're in a down market and you've got hedge funds that are going out of business. And it's not all of them. And I'm not saying that they were all doing wrong or anything like that. But anyway, well, the point is, who could blame them to try to do what they were doing? But the fact of the matter is, they're in a bad position. They've operated on this leverage, and they have to pay on interest. Well, what's happened with interest? Well, the interest rate's getting bumped up. We had that 50 basis point hike, and now the Fed has had to jump into a 75 basis point hike, which is a 50% higher hike. So what that means is the money that they've borrowed is getting more and more expensive, and their capital is shrinking and shrinking. Well, what's supposed to happen is you raise this interest rate, and it makes it, one, harder to borrow money, and so it slows down the money flow a little bit. And that actually goes through a process and ends up trickling down and basically will reduce demand, so to speak. Kind of pushes the dollar into the position to where things will start to get cheaper, hence lower the inflation. And that's a fine plan and everything, and I expect that there'll be another 75% basis point hike, it'll be interesting to see what happens after that. But anyway, the reason I put out this video is to kind of point out they've raised these interest rates, the market's dropping, everything, inflation's still going up, and you got all this fishy stuff, but at the same time, they've decided to put out these digital dollars. The interest rate hike is supposed to kind of slow down the dollar, so to speak, to eventually slow down your supply and demand to bring the prices down, but at the same time, you're introducing a new flow of currency, a new flow of money. So I'm not exactly sure where that's going to balance out and how that's going to go, but there's still some things that you can watch. Some things you can watch for entertainment. watch some of these hedge funds. Watch some more of them go out of business. I mean, it's not really funny. That's a whole other thing. They'll open up under another name and everything, but it's just funny how this is all coming on the scene at the same time. It's kind of like we're trying to dry up a puddle over here, but at the same time we're kind of spraying some more water over into the area. So it just kind of got my mind turning and thinking about it. And don't think that this is just a USA thing, just the U.S. market. Worldwide, I mean, this whole dollar thing, the inflation and the dollar and the interest rate and all that's going to be a worldwide. But anyway, I just kind of wanted to throw that out there. I know it's not a whole lot of straightforward information in there, but there is some information in there, and just some things that you ought to be looking at. Really, if you're interested, look at the hedge funds that have went out of business, and start asking yourself why. Why did they go out of business? Especially whenever there was a market going up before. Now for 6 months it's been going down, but makes a man wonder.